if everybody just took a breath for a minute and could say something like to a seller who considers, $0 BAC, it's like, so you realize that's nothing new, right? You could always put zero. And you could blame it on, well, people were ignorant. And I just tend to think that when you're talking tens of thousands of dollars, perhaps people don't tend to be ignorant. They tend to do it with intention. And there's a reason why sellers offer a pre-agreed upon cooperative compensation, because it helps sell their property, right? I mean, that's not really that tough of a dialogue, and you can spin it your own way. But that's one of the general tenets of this is things really haven't changed. Do they have the opportunity to do that now? And we have a few more discussions because of it? For sure. But when you get stacked, if you have 10 properties, they're all comparable properties, and 8 of them have a cooperative compensation, guess which 8 are going to sell first? It's not the ones with a zero. So anyway, just look forward to that. We're going to cover some of that in sales meeting Tuesday in Utah, Central area, and Wednesday in the northern area, and then Thursday in St. George. So, all right. Hey, listen, I'm going to get underway with this really quickly. I'm going to take something out of turn. Let me just set my timer so I don't make us run long here. But I've asked Paul Erickson to join us today. Paul is with Lifetime Home Loans. He is in our Pleasant Grove office. And you know what? Paul is just a super great LO. More than that, he's just a good communicator. He knows his craft. He knows his data. He's got options. And this is one of the reasons I love our ecosystem is I can literally, just this morning, Paul, didn't I? I walked down the hall and asked you some questions, and Nancy, my wife, has a $1.25 million home, and we got to get some options, and he's running some numbers and some special lending incentives, et cetera. So just remember, this is part of the value of our ecosystem, and why we invest so much time in this ecosystem. It benefits not only us, but our clients. So Paul, hang tight for a minute. I'm going to start this off by sharing my screen. Maybe. Let's see. There we go. All right. So we have an FHA addendum, right? And in that FHA addendum, we're not going to go through all the particulars of that. You guys can see this okay, or do I need to increase the font? I'll take it up one notch. Okay. The part I want to talk about today, without all the other particulars, and we'll spend some time later on the full FHA addendum, but this highlighted section, right? Notwithstanding the financing and appraisal deadline, if applicable, the buyer shall not be obligated to complete the purchase of the property or incur any penalty or forfeiture of earnest money or other down payment, or otherwise be obligated to purchase the property if, right? You guys know my take on small words in contracts. They're usually pretty powerful. If, skip A, we're going to go right to B. If for an FHA loan, the purchase price exceeds the appraised value of the property, excluding closing costs, right? Now, why am I placing such emphasis on that? It's because if we go to everybody know what the amendatory clause is? Dan, give me a quick definition of the amendatory clause.
Sorry, I was busy getting ready for the next meeting. Amendatory clause.
Yeah, what is the amendatory clause? I mean, we've got an FHA addendum. Why the amendatory clause? It's kind of a trick question. The answer is the government.
Now I know why you asked me.
let me pull up a copy of listen, there's 10 different versions of this. Is one I just tracked down online. And Dan, would you just read the highlighted sections?
It is expressly agreed that notwithstanding any other provisions of this contract, the purchaser, or just of this contract, the purchaser shall not be obligated to complete the purchase of this property described herein, or to incur any penalty by forfeiture of earnest money deposits, unless,
right, the value comes back not less than the purchase price. Did anybody pick up the difference? The FHA addendum says the appraisal must come in at least at the purchase price minus the closing costs. The FHA amendatory clause does not have the closing cost portion. So the reason I asked Paul to jump on is I'm sure if I said this, some people would discount it, like Dan, but Paul has street cred. And so, Paul, let me ask you the question. So is this document actually required, the amendatory clause?
Yeah, it's required. We can't fund without getting this one signed. It usually comes in at the end for reasons you and I have discussed, Matt.
Yeah. So is it inappropriate for us if we're representing a seller and very early on, meaning before the appraisal's done, the other side sends over the amendatory clause? Is there any problem with us saying we're not signing that yet? Paul?
Oh, sorry. I thought you said Dan. Yeah,
Oh.
I mean, you're saying at the time of the contract when I've received it, right?
Sure. Or let's just say any time prior to the appraisal, if the other side sends over the amendatory clause and says, we need this signed, what do you say as a lender?
What do I say to them as a lender?
What would you say to that? Is that an accurate statement? Do they have
Yes,
to
that's
have
an
it?
accurate statement. They need to get it signed. And I guess the reason why it's there is because it has the agent's signatures on there as well.
Yeah. So here's my question though. If it's before the appraisal, do you have to sign it?
I don't believe so.
So in your experience, you have to have this, and I've checked with other lenders on this, right? And I think I'm on solid footing. I just want you to vouch for it.
Yes.
You basically need this signed to send with this final package with everything else that is signed at closing, or I should say at settlement,
Yep.
in order for FHA and the lender involved to actually fund the loan.
Correct. And I've even seen this come like after docs are there and we're like, oh, shoot, we didn't get this signed by the one agent. Got to get signed before we can fund. Yeah.
Yeah. So that is what I wanted, is for you to vouch for that, because I've told this to a couple agents and they're like, yeah, I don't think that's accurate. I'm like, okay.
Yep.
So now, Paul, you're lender number 4. So I think
1000% accurate. Yep.
Yeah, I think I'm building up a consensus that that's actually accurate.
So if a lender says that they can't forward, the process along and can't get it up to the underwriting levels that it needs, and it's going to slow down the loan, that's BS.
Yeah, I've never had it slow down the loan itself, because again, and Matt, you can correct me because you know the contract part, but the difference on this one is it does have the agent's signatures. That's why it wouldn't appear on the regular Reqs that's not signed by the agents, right? That's why we need this. I don't understand why. I mean, I've had it explained to me, just like you and I were talking. I don't know why, but apparently everybody needs to be on the same page with the fact that this is the last condition. But yeah, I've never had this hold up getting the appraisal done or anything else, just the funding.
So Haley, I want to put a finer point on what you just said. I don't
What,
think
you didn't like my BS word? You want to really say it? Is that
Oh
what it
yeah,
is,
let's say it. We're recording. Let's go. No, listen. It's no surprise to anybody on this call that we have a lot of peers, bless their hearts, that are either new in the industry or just never dug in and don't actually know what is required. And yet they will like pontificate as if they know, like if they beat their chest loud enough, all of a sudden that makes it, doctrine, right? This is the law. And part of this always is a little bit of an art form. If the agent on the other side says, well, we need this signed right now, I think it's appropriate to, metaphorically give them the hand, slow the roll. Listen, I've gone down this path. We've gone down this path. We actually have in-house lending. We've actually checked with other lenders as well. And if you look at the Reqs and you look at Section 9 that says the offer constitutes the Reqs and the FHA VA addendum, there's no reference here to an amendatory clause. We have no obligation actually via the Reqs to sign this. Now, in pragmatic terms, like Paul was just saying, if it is required, it is a required document to go with the final package to actually fund an FHA deal, that's fine. But we shouldn't lose sight of the contractual protections of our seller client for something that is only an additional lending stipulation for it to fund and record. Does that make sense? And how we say that typically dictates how successful we are with convincing the other side. So I would say something like this: Haley, oh, bless your heart. Bless your heart for trying and playing the game. But no, seriously, Haley, listen, I don't want you to take my word for it, but I will just tell you, we've checked this with our in-house lending for years. I've checked with 3 or 4 other lenders. They all come back with the same answer. I would encourage you to check with whoever you feel qualified, check with your lender and ask them specifically if this is required as part of the REPSI, or is it required as a doc to be sent with the final package to fund and record the deal, right? I'm setting them up. I'm giving them the dialogue rather than just go figure it out yourself. Paint them into a corner and say, and if you get a different answer, I would love to talk with who's giving you that other answer, right? And pretty soon they're like, oh, shiz, I think Haley knows what she's talking about, you know? So, Paul, while I have you on the phone, any other things that you want to share with us as far as going on in the lending side of things, or products we should be aware of, or anything that can help us?
Well, if you guys do have any questions about how you can get a sort of a smaller jumbo client, 10% down with conventional rates, I can tell you how to do that. I've got a product for that. So we're talking somebody, you know, Utah, Salt Lake County, and around the 1.45 million and less. If they want to know how they can do that with 10% down, I can discuss that product more in depth. But it's basically a first and second combo loan that we have with a couple of our investors.
Kyle?
What's that?
I think Kyle's got a question.
Yeah.
No, not yet. I do have a question, but after he talks.
Oh, okay. Sorry.
Okay. And
Paul, I've got a quick question for you. Are we seeing
Yeah.
anybody come into the market that's covering the gap between the assumable yet and purchase price?
no, it's a really tough. It's a
second, or-
great question, and that's the one thing I would say, guys, about assuming. The last 2 that I've seen, the process takes, the quickest one I've seen is 3 months. Maybe you guys have better experience. Most of them are taking 3 to 4 months. So if you do have a buyer that can take out the equity on either an FHA or VA, keep in mind that the servicing lender who is allowing the buyer to assume this doesn't have anybody being paid a commission to help them do this. So you're dealing with people that do not know how to originate, that are trying to originate a loan, basically. And that's why it takes 3 to 5 months to do it. So just be aware, if your seller is advertising that, it is going to be I've actually had clients, I'm not trying to talk out of assuming because it does cut me out, but just saying your clients will probably be in for a different experience than what they thought if they're trying to sell using that as a feature.
Paul's always so polite. I would have said it differently. Yeah, if they want to do that, tell them to put on their seatbelt because they're in for a ride.
Yeah. Yeah. It's the one thing that it doesn't really get told to people. So, but yeah, it's a great question, Haley. I haven't really found anything that is an easy way to do that, you know, to have
But
everything.
are you saying that some servicers are providing it or claiming to provide it? It's just an arduous,
No,
Yeah.
I don't know any. It would be up to the new borrower to say, hey, can I get a simultaneous kind of like second or some other kind of financing that would be, let's say, allowed with FHA, right? As a SIMO close, I have to kind of have that in place and see if that's tougher to do, where you've got that one ready to go, and then it's going to wait around until everything's done on the assumption part with the servicing lender, which, you know, again, that servicing lender is taking their sweet time dealing with the borrower. And then that same borrower is trying to figure out, hey, how am I going to come up with the down if they're trying to buy out 200,000 in equity, right? It's a tough deal. I haven't heard of anybody that's doing it.
Yeah, I haven't known of any FHA product or VA product that would carry a second.
Yeah. I mean, technically you
on-
can carry a second with FHA. I've done a couple of those before. It's rare. Most people say, why would you do it? But for a larger loan amount, someone that may have something on their credit, which still allows them to do a second, but that doesn't allow them to go conventional, that's pretty rare, right? That you can get qualified for a HELOC or a second, but you can't get qualified for a conventional loan, right? Or that you'd want to do a government underlying loan. I have done a couple of those in my career. So technically I would say with FHA, it's probably possible, but it's going to be a tough thing to have that second lender wait and be ready to go and do all the qualifying while they're going through the assumption process. But yeah, it's something that we're still looking into seeing if we can figure out. It's stuff we talk about on our group, on our, LO chat every week. Anybody figure this out? We don't really have a good option. So
Hey, Paul, to
sorry, that
circle
was a
back,
rant.
that's okay. That's good info. And it's great to see the experience level we have in our LOs in lifetime. So thanks, Paul. I just wanted to drill down just a little bit further. The example you used of 10% down on up to close to a 1.5. If they weren't using that program, what does it look like for a typical lender?
So you're basically a 20% down jumbo. And guys, jumbo, if you have a perfect borrower, it's fine. But jumbo is going to typically have 2 appraisals, right? And going to beat them up. I'm not saying I hate jumbo. We have some pretty good jumbo options for people that just want a 1 loan clean, if they have clean credit, really simple income. But sometimes the appraisal process can get tough on those.
It's higher risk.
Yes, it's higher risk. Exactly. And they're different. This is not being serviced by Fannie Freddie, right? So you're dealing with investors that are holding these. So they're just going to be scrutinizing these a lot. And so, if I can avoid jumbo, I do.
So typically, what would you say a jumbo rate is versus the going rate? How much higher?
I mean, ironically, right now, they're actually pretty close. Okay.
Normally,
so that's the thing. Normally you're probably about a half point higher with jumbo with, let's say, a good credit borrower. But right now, like some of our jumbo rates are really aggressive. So you could get really close. It's just, you see that condition list. And it's sometimes embarrassing to go back to a well-to-do borrower that has good credit and say, I need to get up in your business really hard here.
So let me rattle this off. Typically, not today, because rates are always a little in flux, but normally you're a half a point higher. You have 20% down versus 10% down. So, I don't know, on 1.5, that's 300,000, right?
Yep.
That's a big deal for a lot of people. The conditions that come along with a jumbo loan and potentially double appraisal. So
Yep.
I think having those 3 or 4 things at the ready for us, and you're not doing anything unethical. You're actually playing by the game by doing a first, second, 10% down, and you're getting conventional rates.
Yep.
Yeah. So,
exactly.
All right, Paul.
Okay.
Thank you. I know you're busy, man. Thanks for joining our call.
Thanks, you guys.
We'll let you hop off.
Let me know if you have questions. Would love to help. Okay.
All right.
Have a great day. See ya.
All right. Okay, so listen, I I get this question pretty regularly, and it's good that we have some of our office managers on here as well. How many times do you see an addendum and you've gone maybe 2 or 3 iterations, right? Counteroffer, or whatever the case may be, and somebody feels the need to write everything that went in the previous addenda. Come on, am I the only one that has seen that?
Everybody's seen it.
Okay. Well, I wanted to just point something out to you. Let me share my screen here. And this is true of not just the blank addendum to the REPC, but it's true of all of them. If you look at, there we go, the blank addendum, right? So I'm going to just quickly go through this. Whether it's an addendum or a counteroffer, right? And it makes reference because we put a date in here, right? It says, including all prior addendum counteroffers between the buyer and seller, the following terms are hereby incorporated as part of the REPC. So it's making a reference to the original docs, including, that's a big word right there for what we're talking about, including all addenda and counteroffers. Notice it doesn't make any a carve out, an exception to well, that one wasn't accepted. Well, none of them were. That's why we're still countering, right? It includes everything that was in those documents, and those get incorporated. But there's some qualifying language below. To the extent that the terms of this addendum modify or conflict with any of the provisions of the REPC, again, there's a language, including all prior addenda and counteroffers, these terms shall control, right? All other terms of the REPC, including all prior addenda and counteroffers not modified by this addendum, shall remain the same. So if you have 2 previous addenda with 4 items, 2 in each one, right? And the ultimate signed addendum, this one, modifies one of the terms in the previous 4, what happened with the other 3?
Nothing.
Well, be more specific.
Well,
They
they're not
survive.
changed.
Say again?
They survive it.
They survive. They flow through, they trickle through. The only thing that would be changed, right? And I've had agents and even brokers say this, well, you didn't incorporate in the next addenda. I'm like, have you ever read any of the addenda? Because this language is in all of them, right? It's very clear, very specific, unambiguous. If it's put forth in a previous addenda or a counteroffer and not accepted, and then you do another one and you don't specifically strike out something you want, or you don't add something that is not in the previous, then everything else flows through. If this is accepted, then all those other terms, except for the ones that were specifically stricken, are in the deal. And
Hey,
oh my
Matt.
gosh, I cannot tell you how many times I've seen contracts get jacked up because agents and brokers don't understand this. And just for the record, from personal experience at a prior company, I had a $1 million lawsuit because of this very thing. So when I say this, I'm not in my ivory tower, I'm in my concrete tower of experience. This is a real deal. Tammy, did you have a comment?
I was just wondering, do you think people do that because they're confused? Like they read the thing and they're hashing it out and they're confused. So they write it out as they understand. I'm not saying they should do it. I'm just wondering if that's why people do it.
Yeah, for sure. It's a good point. And you know what?
So a phone call discussing that you both agree on what this means would solve that.
Yeah, sometimes, I mean, the example I like to use is sometimes we get addendum or counteroffers with 7 or 8 items, and then it's countered with another one with 5 or 6 items, and pretty soon you're kind of playing contract Tetris, right? You're
Yeah.
trying to figure out how everything fits together. There is nothing wrong or inappropriate to do an addendum. Let me just go completely to the other end of the spectrum. If we had addenda 2 and 3, and we're now writing addendum number 4, to be very specific and to clean it up because it was so confusing, you could say both parties agree that the terms in addendum 2 and 3 do not apply.
Oh,
That's your
okay.
starting point. And then you would add the things that you wanted to. Yes, go ahead.
Man, this is James. I'm probably the person you're talking about, but I like that addendum that cleans things up, and I'll tell you a couple of reasons is exactly what you're talking about, that everybody doesn't necessarily understand how things flow through. The other thing is the lender ends up with questions.
Oh my
The
gosh.
title company ends up with questions. And you get to closing and you find out the title company missed something anyway, I just like it to be clean so that when we get to the end, there's a document that everybody has already agreed that all these terms flow through. So I'm probably the guy who you're cursing at that puts an addendum with 11 things on it to make sure.
No, James, you please don't misunderstand. I don't disagree with that approach. I actually, a different example would be when it is signed and I'm dealing with a broker on the other side or an agent on the other side, and they say, well, it wasn't restated, therefore it's not part of the contract. So I think a good practice, especially when you get into multiple terms, I think a summary addendum is probably appropriate, but I would make sure that I say addendum 2 and addendum 3, both parties agree the terms in addendum 2 and addendum 3 do not apply. That way you literally start with a clean slate, right? Haley, you're shaking your head.
I just think that's high risk.
How so?
I think you could easily, if you want this quick at a glance addendum, I just think that's high risk. because you might leave something out, you might hit highlights and then, it's kind of, arguable. I don't know. I know it's nice and it's clean and everything and maybe purchase price or something, but I just think to try to do an at a glance addendum
You
for
mean
everything
the
that's
summary one at
contained
the
in
end?
an 8 or 9 or 10 page negotiation,
Yeah.
it's just high risk to me.
So I would agree with you, but I know you well enough and I know James well enough that I'm sure you're very thorough to do something like that. So everything we do, don't operate with a machete, operate with a scalpel, right? It tends to have a better result. And I think, listen, if we're dealing with very simple terms, pretty straightforward, I don't know that, a summary is needed. It doesn't hurt anything so long as you proceed with caution and you make sure you covered all of the terms correctly so you don't, like you said, Haley, either remove something or that would have been critical previously. But I hope your takeaway from this at a bare minimum is if somebody on the other side, so I'll give you an example, one I ran across a week or two ago. In one addendum that wasn't accepted, it said earnest money to be X. Okay. And this is one of the most common, by the way, that I see. And there's a few other terms. And then in the counter offer, sorry, in the first one, it was an additional $2,000 of earnest money. Okay. And then the subsequent one, it said earnest money shall be 6,000, right? So if the original earnest money before any addenda was 2,000 and addendum 2 said earnest money to be increased or to be increased by 2,000, right? But that was rejected. And then somebody came and said earnest money to be 5,000. How much earnest money is there? Let me restate that. If the original is 2,000 and they say there will be an additional $2,000 earnest money non-refundable, and then that was not accepted and somebody countered and said earnest money to be 5,000. How much earnest money is in play in this? And that was accepted. How much earnest money is in play?
5,000 if it was accepted.
5,000.
What about the 2,000?
That's
Non-refundable.
5,000.
Say that again, Marianne.
No,
That's
5,000.
included in the
5,000, right?
5,000. But if it were me, I would prepare another addendum to completely clarify it. I would.
So we're going back to James's argument. My point is this: there's some contractual ambiguity because we didn't. So we had $2,000, right, in the original Reqs. The second addendum, which wasn't accepted, is there's 2,000 additional earnest money non-refundable. Okay, and that wasn't accepted. And then we go to addendum number 5 that says earnest money is 5,000. Okay, the fact that we put additional earnest money and the fact that we made it non-refundable, that wasn't specifically stricken from the third addendum, right? Or the one with the 5,000. And so I'm not here to tell you which one would win or prevail, but can you see how that creates some contractual ambiguity, some area to argue? And so, Marianne, to your point, yes, this would be a good opportunity to clarify, right? In my summary addendum, I may say all the other terms acceptable, but in regards to earnest money, both parties agree, in addition to the 2,000 original earnest money, that there will be no non-refundable earnest money, and total earnest money will now be $5,000. Is that clear? Is that language clear?
Yeah.
It is, and it kind of clears up the ambiguity in the other two Reqs, or the other two addenda. So that's my point, is if somebody is calling into question whether something is or isn't, we already beat this horse to death. You could do a summary addendum, but barring that, we can look at relatively simple addenda and pretty easily and pretty accurately determine what is and what isn't in the contract, whether or not the other side is ignorant or not. And James, I love the point that you brought up. It's not just dealing with the other side. It is the lender. It is title. They have the job to look at the contract and discern what is there. So that could very well affect whether or not you do a summary addendum to clear it up. At a bare minimum, you may want to send an email to everybody involved saying, this is what the two addendas say, this is how it trickles through, and you're still getting people on the same page, so to speak. Okay? All right, that was loads of fun. Let me just finish this little topic here by doing this. This came from the Utah Association of Realtors. It's out of their legal library. And I think it's a great opportunity to reinforce some things we talked about on these calls. This first section, real estate agents are expected to be thoroughly competent to represent the affairs of their clients. This is why we don't recommend you go and do property management or do commercial if you don't have experience doing those things, right? The most fundamental way I believe residential real estate agents best meet the fiduciary duty of reasonable care and diligence is to know the Reqs. Good for you guys being here this morning. But here's in the kind of red area here, as a word of caution, and this is in regards to the blank addendum, because that's what we were talking about. As a word of caution, be very, very, very careful in drafting contractual language via the blank addendum. If a real estate agent drafts ambiguous language or unclear language or conflicting language, I'm adding my parts there, then there is the high risk that the real estate agent has breached their fiduciary of reasonable care and diligence. Check first to see if the UAR has an addendum that addresses the very language that you are trying to create. That is, I will tout that all day long. If an attorney has a form, which UAR is a bunch of attorneys for the record, if they've written a form, there is safety in using a form that they have written. If you freelance it and write it yourself, you're taking on significant liability. I'm not talking about the purchase price to be X. I'm talking about, I literally have a folder in my file drawer of horrible addenda, like 3-page addenda typed out where agents kind of throw in some language to make it sound lawyerly, but it's so obvious that they're way, way, way off the mark and have created huge risk, not only for themselves, but for their clients. So just wanted to share that with you. UAR has the same opinion that this company does. Steer clear of writing crazy A language in blank addenda. That's exactly what it said. Crazy A language. All right. All right. Deposit of earnest money with title insurance company. Good or bad? What say you? Haley gives it a thumbs down. Is there Savannah gives it a thumbs down. Why? Let's start with the why. Kyle, all right, we got 3. We've got a quorum. Why do you not like it, Kyle?
I don't like it because you got to get signatures for everybody to get it released. If there's any issues, it kind of goes back and forth. And I just like having it at Metro.
Yeah.
It's just, there's more control over it.
Well, Metro's a title company.
Yeah.
So
True.
You're saying
I'm sorry, I'm sorry. I meant our own. Sorry.
Our brokerage, our real estate trust
Yes.
account.
Our trust account. We have more control of it there.
Listen, there are situations where it makes sense, but I would say they're heavily in favor if you represent the seller, right? The provisions of the Reqs, as a general rule, painting with a very broad brush, are very buyer friendly, right? And they can walk on just about anything, right? When there's terms at the buyer's sole discretion, both in due diligence and whether they're happy with the terms of financing at their sole discretion. That's pretty powerful for a buyer. Now, this is why I say if you're representing a seller, maybe it's not a bad idea. And Kyle, if you do choose to put it in a title company, a good one would be Metro. But here's what it says. Buyer and seller are advised that the title insurance company may require, through a separate written instructions, I haven't found one that doesn't, by the way, that both the buyer and seller mutually authorize disbursement of the earnest money deposit. That's the part we all know about, right? And here's the kicker. even if the Reqs states that no additional written authorization is required. So basically, they're declaring if everybody signs this, it's going to trump the Reqs. Any of the terms in the Reqs in regards to the release of earnest money gets trumped once this document is signed. And then further, it says buyer and seller acknowledge that the Utah Division of Real Estate has no authority over the title insurance company's release because they report to the Insurance Commission. Totally different government entity. So once you sign this over, DRE is saying, don't file a complaint with this because it's out of our hands. Everybody signed it with eyes wide open. So if you have a seller that you're representing and the buyer wants to hold earnest money at title, I don't know that if I would always say, ooh, that's a bad idea. If you feel like they have the potential to walk or there might be some funny things going on, this gives your seller some leverage.
Matt,
Yes.
there are, as we all know, there are several brokerages that instruct their agents to place it at title because they don't want to have to manage their trust account.
Correct.
However, I have in 100% of the cases demanded that it be placed either with their brokerage or they can place it with our brokerage.
Oh,
well,
man.
of course, they don't want to do that. And every brokerage does have a trust account that they can use. And I have never had a situation where they didn't agree to hold a brokerage, even because the brokerage has to be able to do that. They just don't.
Yeah. That's a great point, James. I brought this up in past trainings. For some reason, we have fallen into a mental groove to think that earnest money must be held at the buyer's brokerage. It doesn't say that in the contract. I have that highlighted here, right? It simply says the brokerage. Doesn't say the buyer's brokerage. So whichever brokerage receives it, assuming we're not using a title company. And yes, we have multiple instances, not a ton, but where the buyer is one of those companies like Equity and some others that just don't maintain a trust account. And rather than put ourselves, into a situation like we just discussed with the title company holding earnest money, we can just say, well, listen, if you want to do the deal, you're going to agree to put it into our trust account. Listen, there's no funny business there. The principal broker at whatever company, we're restricted by state law and the Division of Real Estate rules that we can only release earnest money by clear directions of the Reqs, right? If there becomes any ambiguity, we put the brakes on, right? I'm not going to take on a lawsuit for ambiguous language. And worst case scenario is we will hold it until, both parties it's clear are intractable, and then we'll simply interplead it to the courts. Yeah, you know what? That cost me about $300. And interpleading to the court basically says, hey, I've got these funds in a trust account. I'm not qualified to adjudicate it. I want the court to now handle it. And we pitch it over to the court and we're done. So good points. Thank you, James. All right. Let's see. How are we doing on time? Right on time. Okay. So again, don't think of this as horrible. Certainly it has some advantages, like I said, if you're representing a seller. Okay. Now, the assignment of interest addendum. How many of you have dealt with any wholesalers? Anybody? All right, Kyle. Yeah, so the basic gig of a wholesaler is somebody who typically, doesn't have to be, but typically is unlicensed. They go and find a property undervalued, typically, and they secure a contract with the client. And in there, they typically will put something in the buyer. They'll say Joe Schmo and or assigns, right? And they think that gives them the latitude to then assign it to somebody because they're not practicing professionals and they haven't actually read their contract. Can I direct your attention to section 19 of our Reqs? Oh, what is the name of this section, Savannah? Yeah, you're muted.
No assignment.
No assignment. The Reqs and the rights of the obligations of the buyer hereunder are personal to the buyer with a capital B. That means whoever is named. The Reqs may not be assigned to buyer without prior written consent of the seller. And this is what they typically say. Well, we put it and or assigned, so the seller agreed. Well, you got to read the whole paragraph. Provided, however, the transfer of the buyer's interest in the Reqs to any business entity in which the buyer holds a legal interest, including but not limited to family partnership, family trust, limited liability, partnership, or corporation, collectively referred to as a permissible transfer, shall not be treated as an assignment by the buyer that requires the seller's prior written consent. And here's the part that nobody reads. Furthermore, the inclusion of and or assigns or similar language on the line identifying the buyer on the first page of the Reqs shall constitute seller's written consent only to a permissible transfer. So if they're going to assign it to their own LLC, which would be stupid for a wholesaler, right? They're trying to flip it and make some money off of the contract. The very nature of the Reqs that is signed, assuming they're using the state Reqs, does not provide for that. So that's why I wanted to cover the assignment of interest addendum. Now, there is some methodology as to why I covered the blank addendum first, because I get blank addendum pretty regularly that then say, oh, both parties are agreeing that this can actually be assigned and we're assigning it to so-and-so. And sometimes it's that rudimentary. But look at all of the things that are covered in the assignment of interest addendum, right? Is there an assignment fee? Right. First of all, who's buyer one? Who's buyer number two? Is there an assignment fee? Section 2 is a big one, right? Buyer number two, if he signs off on this, is acknowledging, yep, I've reviewed all of the disclosures and I deemed that I'm okay with all the disclosures. So effectively, buyer number two's due diligence is gone at the time they take the acceptance, unless there's some other verbiage, okay? And that's, let's see, and then 2.2, buyer hereby acknowledges and agrees to the following. They're satisfied with the condition of the property, all conditions of the purchase, including but not limited to, check that out, buyer's due diligence, financing and appraisal, and third-party inspection approval have been removed and waived. Wow. So if you ever represent somebody who comes to you and says, hey, I ran across this wholesaler and he's got a sweet property. Kyle, I still want you to represent me. How do we do this? Well, this is a UAR form. It's written by an attorney. We should probably be using it because it's thorough, but man, I'm going to make sure I explain this section right here, right? You waive everything. So if you're going to do this, I would make sure that I have all the disclosures from buyer one, right? That includes everything in section 7. I'd make sure my financing is in line and ready to go. I would probably make a carve out for the appraisal. I'd do a blank addendum and modify this section to allow for the appraisal. Okay.
Matt, wouldn't you carve out that entire section and allow for due diligence too for buyer number 2?
You could. I was going to say, but at a bare minimum, you know, you want to make sure it appraises unless you're paying cash. I mean, even if you're paying cash, you want to know you're not overpaying. So yeah, good point. You could just say section B of 2.2 to be removed from the contract. All previous deadlines persist, or whatever the case may be, to the benefit of buyer number 2. All right, and then completion of the assignment. This I actually didn't highlight. I really should. The completion of the assignment of the Reqs from buyer 1 to buyer number 2 shall take place on such and such a date. So until that date is hit, nothing up above applies. You got that? Because it's not complete. Kyle, was this one that I was dealing with you that they were trying to,
I mean,
I'm trying to remember who it was, but they had a buyer and the dad actually wanted to ultimately be the buyer, but he didn't want to deal with any of the rigmarole of the contract. He wanted the son to do all the legwork. So the son was listed as buyer number 1. And they put in section 3, like the day of or the day before settlement is the date to complete the assignment. Meanwhile, the son has done all the due diligence. They've got, you know, and I think he was paying cash, so lending wasn't that big of a deal. But yeah, until that date's passed, none of the above terms apply because it's not completed yet. The assignment has not been completed until that date. Pretty powerful. So you got to know what's in the contracts. Okay. And then here's the other part that versus a blank addendum. Who is buyer agent number one? Who is the buyer agent broker number one? Number two, same thing. By the way, this section is pretty important too. The agent I was talking to in that situation, I'm like, well, do you have a buyer broker with the father? I was like, well, I don't think so. And, you know, you need that he's ultimately going to be the buyer, so you better have agency for him as well. And you could put in there, if the agency becomes effective at the time that the assignment is completed. Anything wrong with that? At least you're covered, right? And that buyer broker then makes sure that your compensation is still there as well, which is always a very important part. Okay. Okay, and then the last one, seller's consent. This basically trumps the language that is in the REPC, right? Saying that no, the seller is now consenting to this. They understand who buyer number one is and buyer number two is. And yeah, so a pretty thorough document. And by the way, let me just ask you on this, everything we just saw there, where's earnest money talked about? Buyer number one puts up $10,000 earnest money. What happens when it transfers to buyer number two? Does the $10,000 earnest money go back to buyer number one? Say it again, Haley.
Buyer two does it. Buyer
Does
two
what?
reimburses him.
Yeah. So typically what we see is on the assignment fee, it will at least be for the amount of the earnest money that's already in play. Right? And if they're doing it for profit, then there's probably more. But, you know, when I go back to the blank addendum, the ones that I've seen that agents have just kind of freelanced, there's not actually discussion of what happens with the earnest money. I'm like, what am I supposed to do? I'm the broker who is now responsible for adjudicating the funds of the earnest money. Whose is it? Well, without any language and a simple assignment, it becomes the seller's, right? Buyer number one to sign their contract to number two. That doesn't say anything about the earnest money. The earnest money is now part of the contract. So again, just advice to use a UAR form written by an attorney that is well thought out versus just going freelance. Okay. All right. I'm going to finish with this in the last couple minutes. Did everybody see this? This is in regards to what we kind of opened with a little bit of the noise in regards to the potential settlement. If you haven't seen this, go to UAR and download this graphic. It's pretty self-explanatory. It looks like a lot of information. It really isn't. If everything goes through and if the settlement is agreed to come July, there's three different options dealing with compensation. One, the buyer can always pay. That's always been the case as it is today. If you found a for sale by owner that didn't want to pay a commission, well, and you had a buyer broker with your buyer, the buyer is responsible to pay the compensation to the company. That's situation number one, or something similar to it. Number two is the only thing that has changed, like specific to compensation, given this proposal, is you just can't advertise it on the MLS anymore. We're not going to be changing the ERS. The ERS will still have the section in there saying, hey, Mr. or Mrs. Seller, how much do you want to offer by way of cooperative compensation, right? Can they put 0? They sure can. Can they put 2%, 3%, $1,000, anything they want? They sure can. And that's situation number two. And then option number three is for the quote unquote problematic ones that aren't just ironclad and meet the obligations of the buyer to the brokerage. Option number three is simply, listen, if there's no compensation or if there's less than the buyer broker or whatever the case may be, we can negotiate that. We can negotiate it in a REPC using the brokerage payment addendum. We can use broker to broker escrow instructions, which probably means they're going to have another discussion with their seller, but that's cool. Or if there's, you know, if the buyer signed up for 3% with the brokerage and the seller was only offering 2%, then the buyer is obligated to bring in the 1%, and we're still golden. Here's one little nugget that a lot of people don't know with the settlement. Part of the settlement in regards to buyer's agency, in addition to you have to have agency in writing, already the case in Utah, even though a lot of agents don't do it, breaking the law. By the way, I just had this discussion with another broker that I respected, and he says, you don't have to have your agency when you start working as their agent. I'm like, dude, I'm not going to say his name because I have a lot of respect for him. I'm like, you're up in the night. I mean, where are you getting this from? Let me see if I can pull this up real quick. File, open recent. Give me 2 seconds. I'm going to find this here. So open. PV. DRE. I promise it'll be worth it. There we go. Written agency. So this was written a number of years ago. If you know the investigators at the Division of Real Estate, Van Kage has been there forever. And he wrote this article, right? The division received, this is, when is this? Q3 2019. So we're almost 5 years since this been written. Division receives questions on agency agreements, blah, blah, blah. Would like to take this opportunity to remind all licensees about the requirement of obtaining written agency when? Prior to representing a real estate client. And I think it's very easy to demonstrate when agency takes place. If you're giving them information off of the MLS, if you're opening key boxes, things that they can't do themselves, you are now, if you're giving them real estate advice, you're functioning as an agent. If you're giving them an assessment of the market. Okay, now it goes on to say, and this is out of the rules here, says rule number 2. And by the way, this whole section starts with a licensee shall, for the purpose of defining the scope of an individual's agency, execute a written agency agreement between the individual and the principal. I don't know. That seems to be pretty clear, unequivocal language. It goes on in rule number 6 to talk about, prior to you executing, when you start working with somebody on the other side, you're to declare who you represent, right? And to confirm the agency that you have with them. And what they don't have on here is rule number 10. So you can see, I wrote my own little paragraph in here. People inappropriate conflate rule 2 and rule 10. And rule 10 says, when you write a binding agreement, you're to confirm your prior agency. So I'll read this paragraph now. They conflate rule 2 and 10 related to the timing as the same thing. When you start doing agent activities, a level of agency is now taking place, and rule 2 is explicit. You shall have your agency defined in writing. Rule 6 states that prior to executing, not as part of a binding agreement, you are to disclose in writing to the clients. And then rule number 10, not shown in this article, states that you are to confirm the prior agency disclosure. All of this is confirmed in Van Kage's opening paragraph captured inside the red rectangle, which is prior to representing an agent. So when our office managers reach out to you and say, hey, I see you have a Reqs. Where's your agency agreement? You should have had that a long time ago, because they want to help educate you and make you a better agent. Please turn to them and say, thank you for reminding me. All right. Questions, concerns about those addenda we covered?
No, but Matt, I do have a question on what you just talked about.
Okay.
Do you think that if the settlement comes down, that agency and representation will be defined a little more specifically to include actually opening a door? Or do you think this will be open to interpretation? Kind of like, everybody wants to see, well, are we a good fit? Do they like me? Do I like them? Do I want to take them on, give that one-on-one time? What do you think is going to happen with defining representation?
Let's go with what you just said. right, it's pretty crazy to, especially the way I look, to go to somebody like Susan and say, hey, Susan, you want me to be your agent? She's like, not on your life, Martin. No, but you know, it's a big transaction. It's the most expensive transaction for most people. They are apprehensive, and I'm not talking about the ones that are just looking to save a dollar, but the ones that are like, you want me to sign an agreement of exclusivity with you and I just met? Well, just remember this. We have the latitude, right, on the current buyer broker agreement, and this always depends on how skilled we are as a communicator. If Susan communicated any degree of angst, I would say, Susan, you know what? I totally get it. I don't want you to do anything you're not comfortable with. Our company policy, and frankly, the Division of Real Estate who governs our licensure, requires that we have some form of agency in writing before I work as your agent. Let me just put some framework on that. I can have agency for a day, a week, a month, a year, right? I also, one of the things we do in our company, unique from a lot of others, is if you want to sign that agreement, typically we want, 3 to 6 months, somewhere in that range, depending on what you're looking at. It could be longer, but it's kind of crazy. We will put in writing that if we're not under contract, meaning I haven't found a great house for you in short order, anytime prior to that, for the first 10 days, 14, whatever, you can give us written notice and this agreement goes away. Or here's another one. Somebody's really apprehensive. They're like, well, I really want to see some properties. I just don't want to sign exclusivity with you. Great. What are the list of 10 properties you want to see? And can I write that into the current?
Matt, I don't mean to break in there, but I get that. That my question is it going to be a requirement in our state before we can open doors to have an agency agreement signed? Or is it just going to be as it's always been?
Yeah.
Where we're supposed to get it. It's, as soon as we kind of feel, and corporate companies can have different policies about that. Like you said, your broker, you respect, he doesn't have your opinion.
Correct.
So I'm just wondering competitively what we're
Yeah.
going to be up against. And if in this change, they're going to define
Yeah,
representing.
the wheels of
include opening
government,
doors.
the wheels of government and things move slowly. So here's what I'd say directly to your question. Anything that gets changed will come from two forms. One, it will be updated in the Real Estate License Practices Act of the state of Utah, which is the law, or, and it can be both, either and or, the rules from the Division of Real Estate, who basically is given power from the Real Estate Licensing Practices Act to enforce the law and make rules governing it. So the fastest one will be for the DRE to make a change. The slow one will be for the legislature to update the Licensing Practices Act. But given enough momentum, enough news and changes, 18 states already have good laws in place. There's a lot that don't. So there is going to be more and more talk about this. And I think most of the states will slowly be proactive and say, no, you have to do it. Perfect example, in Oregon, who just finally got buyer's agency in the past few months. Their legislature said, if you don't have agency at the time you start working as the agent, you cannot be paid a commission. That's pretty strong language, right? And so do I anticipate more clarifying language in either our rules or our License Practices Act? Yes. But I also think it's probably a little ways out, right? The settlement has to take place in July, if it takes place at all, which I think it probably will. Then, our legislative session isn't until the following January, February, right?
Mhm.
The Division of Real Estate could certainly make rules to clarify. I mean, they already have 2, 6, and 10, which are, in my view, pretty clear already. Just because people ignored it doesn't mean it's not already there. So to competitors who go out and don't do it, one of my favorite dialogues is to say, hey, listen, it's the whole fiduciary argument, right? If you sign as somebody's clients, we have legal responsibilities to you. There's not a lot of great properties on the market right now. When we find those, if I have 5 people that have signed an agreement with us that I have legal responsibilities to, versus 3 people who just want me to be part of a consortium of agents out there searching, who do you think they're going to refer the good properties to? The ones that they have legal responsibility for. So, you know, a little fear, uncertainty, and doubt for the buyer who wants to have that consortium of buyers agents.
Yeah, it was something Brad Belkey said in his presentation. He said kind of those words specifically, that I just wondered if there was going to be something new or different that would fine tune that a little bit to say, hey, if you're going to go open a door, you got to have a signed agreement. But that sounds like it's down the road.
Here's the last thing I'll say. The real estate lobby in the state of Utah is the strongest lobby. We have no interest in being exposed to more lawsuits and litigation. So my guess is that our lobby will look for some more clarifying, explicit language to kind of level the playing field for everybody. But it's going to be a year out before that all trickles through.
For sure. Thanks.
Okay, guys, you're great. Thanks for being on the call. Hope you have a great Monday. Warm weather this week. So excited about that. Have a good one.
Thanks, Matt.
See ya.